Good afternoon, everyone. Hi, my name is Paul Sargent from Transform Finance, and welcome to today's event on combating financial crime through data sharing, brought to you by Transform Finance in partnership with BAE Systems. Thanks very much, everyone, for joining today's session. Thank you to our speakers and panelists, and a big thank you to our sponsor and main event partner, BAE Systems. We have some expert speakers and panelists, and I know the topic on data privacy, data sharing, has been particularly prevalent and very current for all of you at your individual financial institutions. So we're expecting a really engaging event. Please ask plenty of questions down the chat box functionality on the right-hand side of the screen. I'd now like to introduce our moderator for today's session, Astrid Freya. Hi there, Astrid. Astrid is a partner at Vidici Ventures. She brings over 20 years of banking, fintech and regtech experience. She's a fully qualified lawyer, worked across Germany, Japan and the United States, and done a lot of work with Deutsche Bank and used to head up the startup coordination division at Deutsche Bank. And also founded RegTech Berlin and has a master's in law from the Free University of Berlin. So thanks very much, Astrid. I'll hand over to yourself for today's event. Many thanks, everyone.
Many thanks, Paul. Dear ladies and gentlemen, it's so exciting to see that you're dialing in from, of course, DACH region, but also from New York and from Barcelona. So we're looking very much forward to discussing with you this afternoon. To kick off, living in a world of global connectedness, we currently see how this affects us in the light of Corona. And if we take a look at financial service industry, we all know that this global connectivity has always been a key driver of growth. On the flip side, we also recognize that financial crime exactly misuses this connectivity. And this also happens by a targeted misuse of data. Combating financial crime through data sharing, our today's conference is brought to you by Transform Finance in partnership with BAE Systems. And I'm very honored to lead you through the exciting program for the upcoming a little bit less than 2 hours. Transform Finance in partnership with BAE Systems has lined up the leading industry experts to share their insight on the topic of combating financial crime through data sharing. In the first talk, we will learn from Anna Issel, Global Head of FAC Wealth Management of Deutsche Bank, how data sharing and analytics can be used as tools to prevent financial crime. This will then be followed by Gary Kalish, Senior Financial Crime Prevention Consultant of BAE Systems Applied Intelligence, explaining to us how public and private partnerships can disrupt financial crime. Tassilo Amtage, Director Financial Crime of UBS Europe, will then share with us the policy approaches for data sharing. And after having dived now into several aspects of data sharing and financial crime, a group discussion with all speakers will follow, led by Eric Wagner, Head of Group Financial Crime, Erste Group, Austria, focusing on financial crime, old threats, new approaches. We are very delighted then that Dr. Ulrich Göris, Group Head of Financial Crime Compliance of HSBC Germany, who will also be part of the group discussion, will then share his views with his closing keynote. Ladies and gentlemen, you at the screen will always be invited to comment, send a post, ask questions in the chat function at the bottom right. So as a brief introduction, I'm happy to share some thoughts with you. Because when looking at data sharing, we can look at it from several different perspectives, and I'm happy to share some statements with you. Consumers are open to data sharing if they see a benefit. Some of these very classic benefits are improved customer experience, being able to get access to a so far underserved market, and have a speedy access to new services. Real-world evidence suggests consumers may not attach the same value and sensitivity to certain data elements that banks and their regulators do. So for financial service providers, this implies in parallel looking at data sharing for new revenue streams and a sustainable service model for underserved markets is also an essential topic. And when thinking about commercialization, many new business models came up, and I'm also happy that in the course of this discussion, we have a variety of business models here present in our audience. My second statement is the role of long-established players in the financial service industry was and is to be a custodian and a protector of their clients' data. So data sharing in financial services tends to be risk and permission-based with required audit trails and subject to regulation and risk management. The regulatory regime was therefore on purpose extended to previously unregulated services, and new business models came up according to that. So there we see already there is a kind of an inherent conflict. Third statement is data sharing can deliver increased security through enhanced know your customer capabilities, identity validation, and fraud detection if done well. And therefore, if we now take a look at the perspective of supervisory authorities and regulators, the 5th EU directive has been launched exactly in the light of increased terrorist attacks, Panama Paper, and it therefore aims to have more transparency of financial transactions and of corporate entities, enhanced powers for the relevant supervisory authorities and the EU financial intelligence units. But what is the type of data we look at? What is the level of sensitivity? What is the level of security? This has several very complex implications, and for this brief introduction, I only want to highlight two, with two more statements. First is related to technology. New technology has to be adopted as quickly as possible. So we see criminals are the fastest adopters to new technology and looking for any gap to commit their crimes. And everyone who is slower in adoption has a lower chance to win this race. Financial institutions lose $1.4 trillion every year due to financial crime. And we also know that combating financial crime with technology can exactly be achieved through effective, timely, and seamless sharing of financial intelligence from financial institutions for the purpose of crime prevention and law enforcement. But how do we get there in winning this race, given the different levels of velocity? Who should own such kind of data, and how to collaborate? So collaboration brings me to the second aspect. And my statement here is collaboration is key to combat financial crime. From last World Economic Forum, we learned that in the case of financial crime, this sense of partnership will be essential if public and private sector organizations are to develop unified strategies, such as the exchange of data and information sharing across borders. And already today, we see that we have several existing partnerships or task force all over the world trying to work on exactly what I quoted before. So in September 2019, to take a look at the German side, German BaFin launched the Anti-Financial Crime Alliance together with the Zentralstelle for Financial Transaction Inquiries, and the Bundeskriminalamt, and 14 more banks. So what type of partnerships we will see, how effective they will be, what will be the future roles of regulatory authorities, financial institutions, and IT providers? These are still some open questions, and I'm sure in the course of our webinar today, we will find some answers and at least new food for thought with regards to these. I wish you all a very interesting afternoon. Again, do not hesitate to comment, post your views, or ask your questions in the chat section in order to make this as interactive as possible. With this, I will lead over to the next section. Please welcome with me on stage Anna Issel with her presentation on data sharing and analytics as a tool to prevent financial crime. Hello, Anna.
Hello, Astrid. Good to hear you.
Anna is a managing director and global head for AFC Wealth Management. Her responsibilities include advising wealth management on all financial crime-related topics, including high-risk KYC files, as well as optimization of processes related to client onboarding and client monitoring. Anna spent almost her entire career at Deutsche, joining as an analyst 15 years ago. She has held leadership positions in group strategy, focusing on principal M&A, as well as integration and transformation. Subsequently, Anna joined Group Audit as a chief auditor for anti-financial crime, building out dedicated anti-money laundering and sanctions teams, and working closely with key regulators such as FRBNY, BaFin, and ECB. Anna was educated at European Business School in Germany and got an MBA degree of James Madison University in USA. Anna, it's great to have you here. Looking forward to your presentation.
Thank you, Astrid, and I'm looking forward to a conversation. So let me share my presentation. So I hope everybody can see my presentation right now, and I'm gonna just walk you through the document. So the topic of today's discussion is data sharing and how we can use data sharing to prevent financial crime. And given that I'm starting a discussion, I thought I'll think about different levels as how we can share data. We can share the data within our institution, within the bank. We can share the data with other institutions through joint cooperation, through alliances and forums where we exchange information. And we can also better share data with authorities to get additional intelligence, which will then train our transaction monitoring systems to be more effective and efficient. And given that topics number 2 and number 3 will be discussed later and also are less in our direct control, I thought I would focus on data sharing within an institution and what can be done to improve that. And as you can see on my second slide, sharing data within one institution is not so simple. I think we are all aware, in particular here in Europe, of the data protection rules. And in my business, given that I deal with natural persons, with individuals, it is even much more stringent with regards to sharing financial data. So as you can see on the slide, there's the same individual. I have shown Germany and Switzerland as examples for data privacy location. And if the same individuals come to German branch and to Swiss branch, the Swiss law doesn't allow us to share data automatically. So the individual may, may do different things, and we as a bank may not have a full transparency of what he and she's doing. So how can we address that in the best possible way? Well, obviously, the way we try to do it, and we have been relatively consistent in the last years, is to enforce data sharing. So the clients are requested to sign a waiver so that the data can be shared with an institution. If a client refuses to sign a waiver for data sharing, this is already a red flag at which we look and try to understand what's the reason behind not sharing the data, or client trying to protect certain information at a data secrecy jurisdiction like Switzerland or Luxembourg. We are also trying to develop unique client identifiers so we know exactly what file number so-and-so is allocated to just one client.
Anna, it's just
Yes.
Paul here from Transform Finance. I just wanted to
Paul.
jump in. Are you okay to just full screen your slides, please? That would be great. Thank you.
Sorry. Yes. Is this better now?
Perfect. Thank you, Anna.
Okay, here you go. Okay. If in case we don't get waivers, we use different methods, and one of them is market purity rules. Market purity rule basically says that you can only onboard clients from certain jurisdictions in certain other jurisdictions. So, for example, data purity in our bank says that, certain high-risk jurisdictions, like, for example, Russia or Middle East, are not onboarded in Germany. This is not our standard jurisdiction. Some of them are onboarded in Switzerland, but if Russian clients want to open an account in Germany, that is something we usually don't do. And this allows us for certain allocation of data in certain locations where we can build, for example, our transaction monitorings for certain offshore books or for certain Russian or Saudi clients in such way that the entire client portfolio is in one jurisdiction and the data is available comprehensively for us to analyze. And also when we develop our growth strategy, when we decide in what new markets to go and where to attract new clients, we also try to focus outside of data secrecy jurisdictions. So bring it to a jurisdiction where data sharing is not restricted and which allows us for transparency and enhanced monitoring. The next slide is basically similar situation, but a little bit more complex. We have the same individual who is onboarded in one location, which may be a data secrecy location. And then they have these individuals being a beneficial owner of a corporate client, and the corporate client is onboarded in a different division. This also adds an additional complexity because, at least in our institution, we don't yet have a cross-divisional KYC database. And so it requires manual search for UBOs and so on and so forth. And we can't really link the transactions together as of now. Here, I think we don't really have a great automatic solution. The enablers we use is also waivers for data sharing. We keep the information in the KYC file if we are aware that the client is also beneficial owner of certain companies. And we also create committees if we know that the clients are specifically high risk, maybe to name, LATAM clients or let's say Southeast Asian clients who may be politically exposed or close linked to political organization. For these clients, we created cross-divisional committees where we can discuss the client activity and the client's data holistically and can see if there's something which merits our attention, which hasn't been captured in the divisional review. And the last topic I wanted to speak about when it comes to data sharing is also within an organization, but where I think there's also room for optimization, is how the data is exchanged between the front and the end. So on page 5, you see the example of how the data flows in our organization. So in the front, we have a client who is doing certain transaction. The transaction is usually known to his relationship manager, to the person who deals with the client on a day-to-day basis. But then it is captured through transaction monitoring and KYC data, where the data ownership is basically the first line of defense and with IT system of a first line of defense. So this is usually some settlement system or business system or trading system or something. So the data is in that system where the client says, I want to wire money from A to B, I would like to buy certain securities. When the data from first line system needs to be transferred to the second line system, right? And here the topic of data completeness, data consistency is crucial. So the data goes into our system where we, as a second line, run certain algorithms to identify transactions which may or may not be suspicious. And here the topic of understanding the first line and understanding clients is really important, because if we as a second line don't understand what business is all about, then we will not be able to develop rules and configurations and scenarios which will capture what is truly suspicious. And subsequently, after that is done, when the alerts are generated and alerts are again reviewed by ops or second line, and if something is truly suspicious, it ends up in SAR filing. And I have shown these arrows to show how important it is that the data and the output of the data is shared between all the parties involved in the process. So in particular, in large organizations like ours, sometimes people stay within the unit and don't really talk to people left, right, and center. And the information, the knowledge we could learn from the data is not fully used. So the investigators who review alerts don't always and fully and structurally provide information to people who develop rules, so we can make better rules to identify financial crime. And sometimes we don't really discuss the rules in sufficient depth with the front office, who could then explain to us what they think normal for their clients and what they think is atypical, because it also depends on the region. It depends on how wealthy the client is. Our wealthy German clients have quite a different transactional behavior from our wealthy Asian clients. So it is not one size fits all. And here again, I just also wanted to show how important the data sharing is, and also on the way you can obviously encounter problems like certain parts of a business sit in different jurisdictions, or some sit in data secrecy jurisdictions, or some people are restricted to certain languages. But here again, this is where we need to start, so everybody who's involved in preventing financial crime has a full grip of data and knows how to make use of data, so it can be leveraged for improving our database technology models. So I think that's it from my side in terms of how I see data sharing, and also data sharing with an institution. And yeah, I'm looking forward to your questions.
Many thanks, Anna, for providing such insights on how to run data sharing holistically across several divisions within one bank. And as Anna said, it's time for you. If you want to send us your comments, ask questions, we are very, very open to this in order to have a joint discussion with you on the screens. In the meantime, Anna, let me come back to your statement of the different data streams you have and how to make use of these different types of data across the different organizations. Can you probably share with us a little bit more of your experiences here with regards to which type of data probably there was the biggest discrepancy in the different areas when you had to work on this?
Well, I think, to be honest, it's not very complicated. We use two types of data to develop financial crime controls. One is the KYC data. So you need to have a complete file which explains who's the client, where he made his money, and what jurisdictions, what regions, and so on and so forth, what industries. And the second type of data is transactional data, so the entire SWIFT data. This is a lot of data. So if you are smart, you filter the data between data which is relevant for financial crime prevention and data which is not relevant for financial crime prevention. So for example, in our case, if you have, let's say, internal interest or DB employee, turning the client's portfolio to generate better portfolio allocation. This is not really financial crime relevant data because the money never leaves Deutsche Bank. So you need to take into account the data which is relevant, which is basically third-party payments or movements of money outside of the institution. And so these two types of data need to be combined, the KYC data and the transactional data. And only when you have it together, you can start data analytics. And ideally, you do it for several clients so you can find common patterns and cluster the data in a certain way, which will allow you. But that's actually the only data we have. We don't have much more, which is relevant and which we can work with. If, and we can discuss in the course of conference, obviously, if you get external data from authorities or from other information, that also helps. But usually open source data, as of now, we don't really use much, and it doesn't really help in developing our systems. So if we read on the internet, the client is doing A or B, it doesn't usually have so much impact yet.
Okay, many thanks. Any more questions from your end and the screens? I see there is one question popping up, and the question says, do you give much weight to machine fingerprinting combined with KYC data and transactional data?
What is machine fingerprinting?
The way how people, in the end, press certain buttons in order then to retrieve additional information, if I may translate this from the audience.
No, I don't think so. I mean, no, I think what we look at is we actually look, when you look at data, when I develop data-based models, I look at two things. And it's actually relatively simple. I think we all know it from non-financial crime related programs. So if you go on Amazon with something which says inspired by your previous purchase, so this is what I look at. How does your current transactional behavior aligns to your past transactional behavior? So if you're German, you've been transacting in Germany your entire life, you suddenly start wiring money to Saudi Arabia. This is suspicious. If you have been born in Saudi Arabia and have been wiring money sometimes to your family in Saudi Arabia, that is not suspicious. So when I look at data, I look at commonalities to your past behavior. And I also look, and you also probably all know it from Amazon, other people who bought A also bought B. So that's exactly what I also look at. I look at clustering. So if I look at somebody like you and say, okay, let's say you are a professional, your source of wealth is your income from certain company. And so you have a certain behavior, which may be different from somebody else who is maybe a corporate, source of wealth is corporate, or maybe has a real estate business. So I put you in a cluster and look, do you do something similar that people like you do? And if I have a right clustering, I will also find that you probably have commonalities in your behavior. And anything which is an outlier, this is what is called suspicious transaction in our language. So, because there's no other way. The traditional models, they look at rules, they're rule-based. They say, if client does A, then you have to do B. If client brought in more than 10K cash, you need to look. But this is past. Now, when we look at data, then we need to enable the machines to look at outliers. And this is what it's all about. It's about anomaly detection, where a machine can indicate that something is not normal and it can be brought to our attention, and a human being can dig deeper and potentially identify criminal activity.
Anna, we have one more question for you for this session from Maria Alalizade Linseisen. Hello, Anna. Thank you very much for your presentation. Is my understanding correct that independent from the Geldwäschegesetz allows to share the customer data within one company, one group, and even to receive KYC documentation from other financial institutions because of the law of different jurisdictions where the customers can come from? We need always waiver from the customer to be able to share the data.
Yeah, it is correct. For certain jurisdiction, we need the waiver. Now, obviously, it is our decision for new clients to onboard them on the basis of waivers, right?
Mm-hmm.
So for historical clients, it is more difficult because some of them have problems, but we may reject an onboarding if a client is refusing to sign a data secrecy waiver. So yeah, so this is the situation. We follow the law. So if the data is not allowed to be shared, it's not allowed to be shared. I think when it comes to true suspicions of financial crime, there is an option to share data, but it is not kind of common, and that's how. And yeah, so our standard waiver actually allows us to sharing data within the institution, within Deutsche Bank. Obviously, we are not sharing KYC data outside of Deutsche Bank, but I think here it is not about sharing the data, it's about sharing the patterns you have identified based on the data.